The entire cement pack is in focus, the entire cement sector is in focus on the back of the fact that we've seen very positive moves coming in the entire cement space in the last couple of trading weeks. Now, what is the reason for that, and how have cement companies, what has actually changed on ground post the woes of Q2? First up, if you analyze the results of Q2, the first thing that comes into mind was that a lot of the companies actually faced a lot of issues, and some of the key issues were: number one, pricing was a bit of a worry, cement volumes were impacted, as well as inflation coming in terms of cost. When you're talking about demand was tepid due to the fact that when you're talking about the monsoon season, typically demand tends to take a hit due to monsoons in various parts of the country, as well as flooding that does happen on account of the monsoons, and construction activity typically comes to a halt, or at least it gets quite tepid during this particular quarter. That was one reason where volume push through did not come across. Along with that, due to the softness in volumes and demand, a pricing push that the companies tried to take didn't really materialize. Along with that, coal prices, petcoke prices and diesel prices, all of them saw significant inflation, and this was one particular reason where you did see EBITDA margins of the companies taking a bit of a tumble, a significant hit versus what the expectations were, and this was something that while analysts were trying to pencil in this particular quarter in terms of expectations, didn't really come through. So what's actually changed for the companies, between Q2 and the start of Q3? Number one, demand is back. Post-monsoon construction activity is back in good swing, so volumes have been quite good. Along with that, a lot of companies in the conference call, as well as have intimated the dealers of price hikes, and we understand that the price hikes that were taken by the companies have actually sustained on ground as well. Very important development too coming in terms of the excise duty cut taken by the government in diesel as well as petcoke. Now, when you're talking about the diesel excise duty cut that has been taken by the government has taken excise duty cut on both petrol and diesel. This move has translated to almost 11% reduction in cost and diesel prices, also taking into account the fact that a lot of states too have marginally cut the excise duty. So we understand that the average freight cost for cement companies is around 1,200 rupees a ton, out of which almost 40% is the diesel cost, translating to close to 480 to 500 rupees a ton. That is the cost of diesel in this particular EBITDA per ton calculation. So when you're looking at 11% saving on that particular amount, that is on 480 rupees a ton, you're looking at a significant amount of cost savings coming through for the company, and which is why typically most of the analysts and brokers feel that there can be a margin improvement in the coming quarters. It also remains to be seen whether companies are carrying any inventory, whether it's lower price or higher price, and if and when will this particular margin improvement come. Does it come immediately or does it come with a lag? Also, the important part as well as the positive part has been the fact that Newcastle coal prices have actually come down to $155 versus a peak of almost $270 on 5th October. So significant cost savings coming in from the coal prices as well.